Let's talk to Ricardo. He's from ActivTrades. Very good morning to you, Ricardo.
Morning, Nick.
Right, so let's talk about the Bank of England. No surprise, they finally raised interest rates. I think that's something like the first time in 9 years that we're on this sort of path. Okay. I've spoken to a number of sort of commentators, and I think there was a bit of confusion about if this is a one-off, if this is the beginning. What's the strategy behind it? Because there was lots of people as well saying this wasn't needed and this was a defensive play against a recession in the US of A.
That's spot on, Nick. I totally agree with that. I think there's very little in the current environment to justify an interest rate rise. However, the Bank of England is trying to keep some powder dry, as a matter of speaking, for troublesome times ahead.
Yeah.
So, as you know, the likelihood of an unfavourable outcome for the Brexit negotiations is rising, so it's becoming more.
But that's trouble right now, isn't it?
Yes, but the real trouble will start next March. So once there's an actual break and there's no positive outcome preceding that. So if we're talking about the cliff edge Brexit, that's not going to be good news for anybody, and for the UK certainly not. And I've heard some people saying that at that stage it's quite likely we'll see a cut in interest rates. So I think the BOE is probably just just gathering some power to intervene should the need arise. And I mean, we're seeing the way the pound is behaving at the moment. Is now on 128. It wouldn't be at all surprising to see it reaching 120 by September if there's no favourable advances in the tone of the intervenants and in the actual papers regarding the negotiation. And should we have the worst possible outcome for the ones that think that an agreement, a positive agreement, would be the best outcome, then we can see the pound dropping even below what we saw in the immediate aftermath of the Brexit referendum, which was around the 120 point.
Yep.
And it could very easily go through that level. And
okay, so the crowd at the beginning of the year was saying we should buy cable, and lots of big sort of major banks and institutions said it's going to 140, 150, and again the crowd was wrong, let's say. We've seen these support levels on cable just being broken, and recently I read a document saying 125 the next level. Why 21? Why 125? Why not 120? Why not 110? Why not parity? Because we've never been through this before.
Yes.
And that's quite dangerous, isn't it? So all the buyers are going to come in at 125, but the buyers might just disappear.
Yes, I think it will ultimately depend on the general atmosphere. It will, because as you know, markets position themselves before they price in events before they actually events. So players in the markets, investors look at the likelihood of certain scenarios and using their judgment position themselves. So what we're seeing now with the pound at 128 is a pricing in of an increase in terms of percentage points of an unfavourable outcome for the Brexit negotiations is now more likely. So in terms of percentage point, that's now increased maybe from I mean, I've heard people talking, like Liam Fox talking about 60%. I don't think is anywhere near as high as that.
Right.
But maybe it's risen from 10, 15% to maybe 25%. So that's what we're seeing now. And on the road to March, we'll have some crucial points, and October is one of them. End of September, October is one of them, because by then we will need to have something substantial in place in terms of a laying out of a plan that will be executable, and we'll need to have an agreement as well for that, and between the two negotiating parts, and also approval by Parliament will be required. So all of this, we're running out of time. There's a lot to get done. And so markets are positioning that themselves as the story unfolds. So they are pricing in ultimately the chance of a no-deal Brexit, or the chance of a good deal for Brexit. So it will depend on how each chapter in this saga unfolds, and that's why you see these levels being set. So it will be according to the expectations that one needs to have at a certain point, and then we move on to the next stage, and then maybe it will be 120,
Yep.
and then maybe 110.
So if you were going on a holiday to America at Christmas, would you buy your currency now or at Christmas?
I don't like to buy currency with. I think I'll probably wait until a bit later. Yes.
I think I would as well. Okay, just to finally, any other currencies moving?
Well, overnight we've had some interesting movement on the New Zealand dollar. The Royal Bank of New Zealand, the central bank, announced that they will not be raising interest rates, so they've been keeping their interest rates at very low levels. This is because of concerns regarding growth in the economy, and they even opened the door to a possible cut. So we've seen some losses on the New Zealand dollar, and also the ruble also suffers some strong losses overnight because of sanctions. Exactly. So due to the Novichok attack against the Skripals in Salisbury, the US announced that they will be imposing some sanctions, and that had an impact on the currency. But otherwise, not much to report
Turkish
today.
lira. Time to go on holiday to Turkey, maybe.
Yes. The Turkish lira has been taking a battering. Interesting situation there. There's political tension between Turkey and the US, which is not helping. But also the state of the economy is not very good. There's an internal struggle between the central bank and President Erdogan. President Erdogan wants to keep the interest rates low. The central bank sees a clear need to rise them in order to contain the depreciation of the currency and stop inflation, etc. But Erdogan is a very powerful man at the moment, so that also seems to be impacting the currency, and who knows how low it can get. Yes.
Right, on that note, thank you very much for your time.
Thank you, Nick.